Welcome to an insightful exploration of two popular investment vehicles: mutual funds and exchange-traded funds, ETFs. In this video, we'll delve into the world of these diversified investment options, understanding how they work, their benefits, and how you can leverage them to build a well-rounded portfolio. Let's get started. Mutual funds unveiled. Let's begin by understanding mutual funds. A mutual fund is a pool of money collected from many investors, managed by professionals who invest it in a diversified portfolio of stocks, bonds, or other assets. Each investor owns shares proportionate to their investment amount. Exchange-traded funds, ETFs, explored. Narrator, voiceover. Moving on to ETFs. They are similar to mutual funds but trade on stock exchanges like individual stocks. ETFs are designed to track an index, a sector, or a specific asset class. They offer flexibility, allowing you to buy or sell shares throughout the trading day. Diversification, the core benefit. Narrator, voiceover. One of the biggest benefits of both mutual funds and ETFs is diversification. Investing in these vehicles provides exposure to a wide range of assets, reducing the risk associated with putting all your eggs in one basket. Professional management. Mutual funds and some ETFs are managed by experienced professionals who make investment decisions on behalf of investors. This expertise can lead to well-informed investment choices that align with your financial goals. Types of mutual funds and ETFs. Both mutual funds and ETFs come in various flavors. Equity funds focus on stocks, bond funds invest in fixed income securities, and sector-specific funds target specific industries. Choose funds that align with your risk tolerance and investment strategy. Costs and fees. It's essential to consider costs and fees associated with mutual funds and ETFs. Expense ratios and management fees can impact your returns. Compare these fees and opt for funds that offer competitive rates. Liquidity and trading. ETFs offer intraday trading flexibility, allowing you to buy or sell shares at any point during market hours. Mutual funds are typically traded at the end of the trading day, based on the fund's net asset value, NAV. Tax efficiency. ETFs are known for their tax efficiency. Due to their unique structure, ETFs can minimize capital gains distributions, potentially reducing your tax liability compared to traditional mutual funds. Understanding index funds. Index funds, a subset of mutual funds and ETFs, aim to replicate the performance of a specific market index. They offer a cost-effective way to gain exposure to the overall market or a specific segment. Building a balanced portfolio. Mutual funds and ETFs play a crucial role in building a balanced investment portfolio. They provide diversification, flexibility, and professional management, helping you achieve your financial goals over time. As we wrap up this exploration of mutual funds and ETFs, remember that these vehicles offer accessibility and diversification, whether you're a beginner or an experienced investor. By understanding their features, benefits, and potential drawbacks, you're better equipped to harness their power in your investment journey. Thank you for joining us today to uncover the potential of mutual funds and ETFs. Diversifying your investment strategy is a step toward a more resilient and balanced portfolio. If you found this video valuable, be sure to like, subscribe, and share it with fellow investors. Until next time, may your investments thrive in the world of mutual funds and ETFs.